Hello, traders. Gary Wagner with the Gold Forecast, 21st day of February, Tuesday, approximately 10:15 in Honolulu, Hawaii, and this is the Daily Report. A major move in gold is pushing it higher above $1,400 today, currently trading 1405, 1406 bid-ask spread. The market, no doubt, has been on an absolute tear. Traders, we are looking at a 60-minute candlestick chart. And as you can see, over the last couple of hours, we have had extremely quiet activity, kind of settling in this area right around 1406. You can see the big spike that we had. This is that spike that really took us right in here up above $1,400. That happened last night. It did come down, but as you can see, it came down but held that 1400 very solidly. And then in early morning trade this morning, traded up and hit this high right around 1408. Traders, we're looking at a daily Henkin candlestick chart. This is the average chart, a Henkin Ashi chart. And as you can see, when we take a look at today's Henkin candle, you do have that absence of the wick, and at the same time, you have the body size, of course, growing extremely with this $17 rise in the market. Traders, I wanted to spend a couple of moments with you and talk to you about an alternative and a very, very possibly valid wave count that I'm now looking at. As you can see on the board, this is our daily chart with our Elliott wave count. And the big change that I have made is looking at this bottom here as the bottom of our major count 4, as well as our intermediate C and our minor C. Now, Elliott wave is as much of an art as it is a science, and as new information comes in, we have to be able to be flexible enough to take that information and work with it in such a way that it makes sense in terms of the Elliott wave. Of course, we did hit our top. This is a triple top, so without a doubt we have our A, our B, and our C. But here's the key. If this was only the A wave down, meaning not the C, when this wave came up, once it surpassed that 75% level that we talked about, and that was around 1496, that was right in around here. Once it surpassed that area, it became quite clear to me that this is acting a lot like a strong impulse wave as opposed to it acting like a wave B, meaning a impulse wave within a corrective period. You don't get this kind of a strength unless you have what's known as an irregular top. There seems to be no doubt, at least in my mind, when I look at this and the fact that the way we overtook this market right in here is that to address it in that way, if in fact we are looking at a market that is going into an impulse cycle, the good news is that we finished our entire A, B, and C, both intermediate and minor, and we are now in not only wave 1 on our minor count, but we are also on wave 1 on our intermediate count and wave 5 on our major count. That being the case, and if in fact it turns out to be this as a correct numbering as opposed to what is known as an irregular top, this impulse phase is just at the beginning and in fact could easily propel us to new record tops. That's why in the Kitco article that I wrote last Friday, what I was looking at, those record tops that I was calling for, were based upon the fact that I felt that the way that this last rally had been acting very, very much like a impulse rally as opposed to a small rally within a corrective phase. Now, I believe that we're still going to have our pullbacks, and of course, this being one, we will have the continuation, of course, of 1, 2, 3, 4, and 5. And I think that this impulse wave itself, 1 through 5, could easily propel us to new highs. There is absolutely no doubt in my mind that we are going to witness history over the next couple of weeks in terms of gold prices, the old record high and what I believe to be will be a new record high in gold. This has been Gary Wagner wishing you, as always, good trading, and we'll talk to you tomorrow for another daily review. Bye-bye.